Okay, dear students, this is Mustafa Mirchawala from Mirchawala's Hub of Accountancy, your SBR trainer, and today we are going to discuss the latest past paper of consolidation foreign subsidiary of March-June 24 attempt. Okay, and before we move on, let me show you the recent results for your motivation. These are the scores in for June 2024 attempt. Even there are some position holders also included in this, and we have made like 5 lists. This is list 1, list 2, then we have list 3, list 4, and list 5. Okay, so a lot of students successfully cleared. So when they can do, you can also do. These scores are for your motivation. They also followed the same path. They acted upon my advices. They completed the course on time. They did mock exams. Yes, they read articles. They availed marking facility. So if you follow, and they stayed away from negative people, the most important thing. So if you follow these things, you can also clear. Okay, and today we are going to discuss the foreign subsidiary. Just one thing I would like to clear in advance, that foreign subsidiary is a technical topic, and it is, as this video is going to be uploaded on YouTube as well, so it is taught by different teachers in sometime different style. Okay, so definitely I'll follow my style. So if you have taken my lecture, then it would be comparatively easier for you. Okay, but don't worry, I'll try my best. Now, section A, question number 1. Peony Company is a parent company of a group with one overseas subsidiary and a financial year end of 31st December X2. Okay, be careful, financial year end is very important. The functional currency of Peony means parent company, and the presentation currency of the P group is dollar. Normally in our questions, the functional currency of parent company is dollars. Okay, the following exhibits available on the left hand side on the screen provide information relevant to the question. Now, these are the 3 exhibit. These are exhibit 1, 2, and 3. Okay, now the first one is functional currency. I would say this is old copy paste of previous attempt. It was just copy paste of previous attempt. Okay, right? So let's discuss this first part, only this first part right now. It is written, Nomstra Company is a foreign subsidiary. Nomstra Company is a foreign subsidiary of Peony Company with a functional currency of NY. This is the functional currency of this foreign subsidiary. Nomstra Company's sales and related costs predominantly dominated and settled in NY. Yes, a very major point. A very major point. Functional currency is the currency of the country whose primary forces determine the sales and cost of our products. Okay, so see, the sales and cost are in NY, so this is the primary factor, very important factor. So right now this first point goes with NY. Okay, now Peony Company means parent company had previously provided a supporting loan in dollars to Nomstra Company, which had been settled during the year. Now this is one of the secondary factors. Okay, and the secondary factor is in which currency you have generated your loan. So yes, in past the loan was generated in dollars, but yes, now they are settling because now they are earning in NY. So again, this is 50-50 point. But see the next point. And funds from financial activities are currently generated in NY. Okay, that's very good. Only one past loan was taken in dollars, but now the new loans are taken in NY. So it's a secondary factor, still the 50-50. Now, Nomstra Company board of directors is free to determine its decision independently from the board of Peony Company. This is very important point. They have autonomy. The subsidiary company board has autonomy to perform their decisions. So once again, this point is also in the favor of NY. This point is also in the favor of NY. Okay, so after reading this, my conclusion is that their functional currency is NY. The functional currency of Nomstra Company is NY. Okay, right? Now this was this came in many past papers. Honestly, you can go and see your past paper, your exam kit, your software area of accaglobal.com. You will see this many times. So it's again came for 5 marks. So I would say this is free cash marks which you can easily earn. Okay. Now I will give you some pointers so that you can make up the answer. Now read the first requirement without wasting any time. Just read the first requirement. See, using Exhibit 1 in accordance with IAS 21, the effects of changes in foreign exchange rates. Explain why Nomstra company's functional currency is the NY. Why Nomstra is NY. So let's start. First of all, I have written some points. First of all, you need to do state the rule. You need to write the IS. So you need to write the definition of functional currency. You need to write the definition of functional currency. It is the currency of the primary economic environment of that country. You will write this, and then you will write the primary factors. The primary factors are the currency in which your sales is done, like your selling price, the currency that dominates your selling price, the currency that dominates your cost. So you can see in this question the sales and cost are done in NY. And if you cannot solve it through primary factors, then there are some secondary factors. Secondary factors are the currency in which you generate loan or source of finance, like issue shares. And the one more secondary point is, secondary factor is the currency in which your operating proceeds are retained. So if you see all primary and secondary factors, listen, if you connect with this question, go very easy. The sales and the cost are all incurred and affected by NY. So the main primary factors goes with NY. Then the proceeds are retained. The proceeds are retained in NY as well, because the examiner is silent for this. But yes, there is one issue. In past, this subsidiary generated loan from parent company in dollars. This is a problematic point. Okay, but it is just a secondary factor. But the good news is, you are going to pay this loan now, and as you are paying loan now, so you are using your NY proceeds for this. And plus, it is written clearly in the question, you just read that the new loans and the new finance are generated in NY. So by looking all these factors, I can easily say that the functional currency of this subsidiary is NY. But yes, there is one factor is left. Listen, I hope you have taken the normal classes. In our normal classes, we discuss one case. Sometime what happens, that parent company artificially creates this subsidiary just to, listen my words, just to avoid the foreign exchange gain and losses to be booked in P&L. So that's why parent companies created an artificial subsidiary company, artificial foreign subsidiary, listen my words, to park exchange gain or loss in OCI instead of P&Ls to avoid their EPS and profits. And what are the indications that parent company is playing game? What are the indications that parent company is doing fraud? Just telling you, no need to write all. When sometimes S company's board has no autonomy, S company board just do whatever P company says. Third factor, whenever a funds hits, whenever S company receives any funds, these funds are remitted immediately to the parent company. If these type of signs are there, listen to me, if these type of signs are there, then in such a case the functional currency of S company will be the same as parent company, means dollars. But in this question there is no such indications. It was clearly written, we just read it, that S company board is independent, like they have autonomy. So there is no such game. So now in this case, we can't say like this, that the functional currency of P company will be the functional currency of S company. We would say that the functional currency of S company is NY. See, in this question, S company board has autonomy to work. That's why S company's functional currency will be NY, not dollars. So few points you need to write, and as usual, I always invite you guys to solve it on the software and send me for checking, right? Obviously this checking facility, marking facility is for my registered students. Okay, So you can also send me. So just have a look at this. Okay. Now it's all practical consolidation, lot of things to discuss. So let's discuss this area now. Okay. Be confident, concentrate on the screen, don't use cell phone. On 1st January X2, Peony Company acquired 75% of the 1.5 million NY ordinary shares of Nomstra Company. Now, takeover date is 1st January X2, and as you know that year end is 31st December X2. Takeover date, acquisition date is 1st January X2 and year end is 31st December X2. Okay. Now, for for 1.1 million dollars, already your COI is in dollars, already your COI in dollars. Be careful. When the retained earning of Nomstar company were NY 4.8 million. Okay, this is the acquisition date retained earning. There were no other components of equity, thank God. Easy thing. Peony company determined that the non-controlling interest NCI in the Nomstar company had a fair value of NY seeds in NY currency of 2.7 million at the date of acquisition. Okay. Now, during the year ended 31st December X2, Nomstra company reported a loss of NY 900,000. No dividends were paid or proposed. Excellent. On 31st December X2, Nomstra company reported a total equity net asset was NY 5.4 million. This is the year end net asset. This is going to be year end net assets of S company, year end net asset packet of S company. Okay. Now be careful. See the screen. I'll try to go as simple as I can. Listen, 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 listen. Can you see this sketch? Yes, you can see. 1st January X2 is the acquisition date. 31st December X2 is the year end reporting date. My dear student, as you can see on the screen, that the year end net assets of S company is 55.4 million, means 5400 NY. Okay. And there is a loss of 900 NY this year. Okay. Now, as you all know, if this loss would be a profit, if this would have been a profit, it would have been added, in the year end net asset. But as this is the loss, so that means it is already deducted, it has already been deducted from the year end net asset. So if I do reverse working, if I go from year end to the year start, so I need to add these two. 5400 plus 900 is 6300. So this is my acquisition date net asset. This is my acquisition date net assets. This is my acquisition date net assets. Okay. Right. Are you getting? This is acquisition date net asset. As a student, you may ask, sir, why did you calculate acquisition date net asset? Yes, because I need to calculate goodwill. Okay. Now the next thing is these. This is your year starting exchange rate. At the start of the year, acquisition date, $1 is equal to NY12. At the year end, $1 is equal to NY18, and this is the average rate. See, weighted average rate is NY15. Okay, $1 is equal to NY15. Nothing difficult, very straightforward information. Now see what is written. See this. Goodwill arising on the acquisition of Nomstra company was calculated incorrectly. Thank God. See, this is the style of examiner. Openly they are saying incorrectly. That means they are indicating you that there's a mistake. So correct it. Incorrectly at 725,000. This is the goodwill computed by them. This is almost also the amount included in the draft consolidated SOFP. They have included this 725. In arriving at this figure, the NCI at acquisition was translated and recognized using the exchange rate at 31st December X2. This is the mistake. See, whenever I teach this topic in class, how I start this topic. Listen, let me tell you my style. I say that at the acquisition date, parent company management books the tickets and they go to foreign country. They go to foreign country, they calculate goodwill at acquisition date in foreign currency, and then they shift goodwill first at acquisition date exchange rate, everything at acquisition date, COI, fair value, NCI, everything should be translated using acquisition date exchange rate. So you get a goodwill at acquisition date, and then you transfer it to the year end, and then you calculate exchange, foreign exchange gain or loss on goodwill. That's a separate step. But at the acquisition date, we use acquisition date rate. But these stupid people use, see, for NCI, they used exchange rate at 31st December X2. So this is pure mistake. That's why goodwill is wrong. And you can they have used COI. See, they have used fair value NCI at acquisition using 2.7 divided by 18. 18 is the year end exchange rate. 18 is the year end exchange rate. 18 is the year end exchange rate. You can see. $18 is the year end exchange rate. You can see. Okay, so this is the first mistake which I need to correct, and I'm going to correct it. Don't worry. Now the second thing which is easy cash marks. At 31st December X2, a goodwill impairment of NY 3.3 million, yes, was calculated but not recognized in relation to Nomstra company. So you need to recognize it yourself. Okay, so I say this time these things sometime in the final accounts of F7, that in F7 level you have to correct the wrong things and you have to complete incomplete things. So same as I would say here, the goodwill calculation was wrong, which we need to correct it. We need to make the correcting entry, and goodwill impairment has not yet been posted, which we need to post from zero. So they are saying at 31st December X2, a goodwill impairment of NY, see they have given in NY, the foreign currency, was calculated but not recognized in relation to Nomstra company. The group policy is to translate goodwill impairment at the average rate of exchange. Okay, they have told you. So now I will do three work in these two paragraphs, three works. Number one, I will do correct calculation of goodwill and I will make a correcting entry, okay, for goodwill. Number two, I will calculate the goodwill impairment using the average rate and I'll make the entry because it has not yet been posted. And third thing, I will calculate foreign exchange gain or loss on goodwill, which we used to do in the class as well. So these three things right now I have to do. Just leave this third paragraph. This is my headache. I'll do it. I will do it. Don't worry. You just enjoy. You just enjoy. I will do my best for this. Okay. Now let's see. Let's move the screen. If you want to take the picture of this question, you may, so that I can go for some solution things. Please check it out. If you want to pause it and read it, still you can do. Now read, this is pre-populated area. Don't worry, I'll discuss this on Excel. Now note number one, see point number one, discuss with calculations how to correct the treatment of Nomstra company in the consolidated financial statement of Peony Group for the year ended 31st December X2. Okay. So we need to make all the entries, and then we need, in the next requirement, we need to go to pre-populated spreadsheet. We need to go to pre-populated spreadsheet. Don't worry about it. Be confident. Just give a positive message to your mind. Okay, let me do it. Now let me do it for you. Listen. Goodwill should be calculated of foreign subsidiary using acquisition date exchange rate. That is this. Okay, I've just written one line. Now let me start it. So they have given you COI in dollars, that was $1,100. Now everything should be done at the acquisition date. So acquisition date, the rate was 12. $1 is equal to 12 NY. So $1,100 is equal to 1,100 multiplied by 12. 1,100 multiplied by 12. This is going to be 13,200. Listen. Okay. Then fair value of NCI. fair value of NCI was 2700 NY, but these stupid people use the year-end exchange rate, but now we are going to use acquisition date rate. So 2700 divided by 12. We are doing correct working, okay? It's 225. Now less fair value of net assets. So acquisition date net asset was 6300. I just calculated in front of you. Hope you remember that timeline. Obviously this is also divided by 12. 6300. Okay, so now we are what? First calculate goodwill in NY. 13200 plus 2700 less 6300. It's going to be 9600. See, goodwill in NY and 1100 plus 225 minus 525. Now this is 800. See, goodwill at acquisition is 800. Hope you remember, you just saw the question. They have calculated as 725. They calculated wrong goodwill as 725. In fact, in reality, the correct goodwill is 800. So how much is the difference? 75. And why this difference is coming? Because this number is wrong. This number is wrong. Because they calculated NCI as 150. Go and check. Even you apply your calculator. Just do 2700 divided by 18. Just do 2700 divided by 18. It will come as 150. 2700 divided by 18 is 150, but here it is 225. So that means exactly there is an error of 75. What does this means? They have reduced fair value of NCI by 75. So now what we have to do, use your common sense. We need to increase NCI by 75 as well as goodwill by 75. See, goodwill is also. So when we increase goodwill is an asset. So goodwill debit 75 and NCI is the part of equity. So NCI credit 75. So let's make the first correcting entry. Goodwill, see, goodwill debit 75, everything is dollar, and NCI credit 75. This is my first correcting entry. This is my first correcting entry which I have to make. This is my first correcting entry which I have to make. Okay, now next thing. Now I'm going to work purely on goodwill impairment and exchange gain or loss on goodwill. I'll teach you in the same way as I teach in my class, same way. Okay, so now the future work has not been done by accountant, so we are doing from zero. Okay, so can you tell me how much is the goodwill impairment? Impairment of goodwill is 3300. See, first of all, impairment of goodwill in NY is 3300. Okay, and as you know, impairment is a for the year thing. It's an expense, so it will go, it is written in the question, it will be retranslated using average rate. So 3300 divided by 15. 3300 divided by 15 is how much? 3300 divided by 15. It's 220. Okay, now very interesting thing I'm going to teach you, very in a different style. Listen, see, 9600 minus 3300, what will be the year end goodwill? 96 minus 33, it's going to be 6300. This is goodwill at year end. Goodwill at year end, and obviously when this is goodwill at year end means 31st December x2. So now I need to retranslate it using the year end exchange rate. Here I have to retranslate it using the year end exchange rate. So this will be 350. $350. Now very interesting thing, let me change the color. Wait, see this area, 800. Now just think about dollars. $800 was your goodwill, then this was reduced by 220 because of impairment. So 800 minus 220, 800 minus 220 should have been 580. But see, It's just 350 at the year end. It should have been 550, 580, but it is 350. So why did it come down? Why did it come down? What made him move? The difference is the exchange loss. The difference is the exchange loss. Exchange loss. So 800 minus 220 is equal to 580 minus 350, which is 230 negative. So this will be your foreign less foreign exchange loss on goodwill. This is the balancing number. Okay, so now this is this thing and this thing. We need to make entries for these two. As we all know, goodwill impairment. See, we are doing using full goodwill method. It's a full goodwill method. So in full goodwill method, yes, NCI also bears the burden of goodwill impairment. So what will be the entry for goodwill impairment? Very simple. It will be distributed between CR, means retained earning and NCI. So retained earning, group retained earning debit 75%, 25% is your NCI and goodwill credit. And what about foreign exchange loss? See, as the method is full goodwill method, not proportionate method, so this 230 will also be distributed between translation reserve and NCI. Now I would use the word translation reserve. Okay, hope you remember translation reserve. Or if you are talking about income statement SOCI, it goes in OCI. Okay, so let me make the entry for these two. First, let me make the entry for 220. So for impairment, the entry will be goodwill credit 220. The CR, consolidated retained earning, or some people write retained earning, and NCI. So it will be 220 multiplied by 0.75. It's going to be 165, and this is 55. Okay, like 75 and 25%. Okay, it's in dollars. Now come to the exchange loss on goodwill. Obviously goodwill is going down by 230, and one thing is translation reserve and the other thing is NCI, again 75-25. 172.5 minus 230, it's going to be 57.5. Okay, so I made these. This is entry number 2, this is entry number 3. These 3 entries I have made, 1 2 3 entries, and these are very important. If somebody has made it, it's a great thing. Okay, I would also recommend you to write 1 or 2 lines, because we need to discuss that how to book impairment, how to post the entry of impairment. Okay, as it is a full goodwill, you can write like this. As it is a full goodwill method, so impairment of goodwill will be distributed between retained earning and NCI. Simple English, simple writing. Also, as it is a full goodwill method, so the foreign exchange loss on goodwill will be distributed between translation reserve and NCI. Okay, so now we are moving towards that last paragraph which I skipped. Okay, and this is the little hard work needed now for this. Nomstra assets and liabilities excluding goodwill. So now they are not talking about goodwill at all. Goodwill chapter is closed. We have done it. Don't take tension now. Were translated into dollars using exchange rate at 31st December X2. Okay. Hope you remember when you guys were doing foreign subsidiary balance sheet or SOFP, you used to do one last king step. You used to convert complete SOFP assets and liabilities using closing rate. Remember? And you used to calculate a balancing figure from the SOFP, which was called exchange gain or loss on foreign operation net assets. Exchange gain or loss on foreign operation net asset. Remember, now they are talking about this thing. Okay, and I'll teach you how to calculate. Don't worry about it. I'll teach you in the same way as I just taught you the impairment thing. Okay, same thing. The same exchange. See, this is the same exchange rate was used to translate Nomstra company loss for the year ended 31st December X2. This is the mistake. Loss, look, see my hand. Loss is a for the year thing. Loss is a for the year thing. So for the year thing, we use average rates. It's not a year end thing. It's a for the year thing. So this is an error. This is a permanent error. This is an error for sure. This is an error. Okay. The resulting total exchange loss of 175,000 has been included in the translation reserve. Just think when they use a wrong exchange rate on the loss for the year. So that means this exchange loss, the balancing exchange loss number is also wrong. This is also wrong, which I will be correcting it for you guys. Okay. And what the second error, for one error they have done, and because of the first error, this exchange loss is wrong. And the second error, the resulting total exchange loss of 175,000 has been included in the translation reserved in the draft consolidated SOFP with no entry made to the NCI reserve. Hope you remember. Just recall it. Whenever we used to calculate a balancing number of foreign exchange gain or loss on net assets of foreign operation, we used to distribute it between translation reserve and NCI. Translation reserve and NCI. If you have taken the class, they have booked complete amount to translation reserve. They have booked complete amount to translation reserve, which is very wrong. Which is very wrong. Okay. So we need to give NCI share as well. That I will be doing. So giving you 30 seconds just to read these 4 lines again and concentrate. Then I'll be moving towards the solution thing. Okay. Now what I'm doing, listen. See. I will do it in the same way as I just did goodwill work. See, net asset of S company at acquisition was 6,300. Okay, net asset at acquisition was 6,300, and as these were of acquisition, so acquisition date rate was 12. So 6,300 divided by 12. 6,300 divided by 12. It's 525. 6,300 divided by 12 is 525. Now the next thing is loss for the year was 900, and we should use the average rate for loss, not closing rate. This was the mistake they did. So 900 divided by 15. 900 divided by 15 is, I think, 600. Okay, 60, sorry. 900 divided by 15 is 60. Let me do it. Okay, yes, 60. Okay, now 6,300 minus 900, year end net assets is 5,400. Now, as these are the year end net assets in NY, so we need to use year end exchange rate for this. So 5,400 divided by 18 is 300. Now use your common sense. Let me use a different color. See, 525 was the net asset in dollars at the beginning of the year. Then you have 60 loss. 525 minus 60 is 465. 465. But so 525 minus 60, the year end amount should be 465. But now see, the year end is only 300. So why did it move? Why did it move down? Because there is a loss. There is a loss. Exchange loss on net assets of foreign operation. Okay, this is a balancing number. So now use your common sense. First thing, I've solved this correctly. I've solved this 100% correct. Listen. And when I'm solving correctly, the exchange loss, the translation reserve to be debited is 165. But in the question, you can see it's 175. They have calculated as 175, but in reality, it's 165. Why? There is a difference of 10. Why there is a difference of 10? See, let me explain you. See, because they calculated this figure wrong. Please concentrate. They calculated this figure wrong. This figure should be 900 divided by, they use 900 divided by 18. They use it as 900 divided by 18, which is 50. They used it as 50. They calculated it as 50, but this should have been at 60. So see, the difference is 10. The difference is 10. They booked less loss. In reality, the loss was more. In reality, the loss was more. So there are two issues which I need to address. The first thing, they used a wrong exchange rate for loss, so that's why they underbooked the loss. The loss should have been 60, they booked it as 50. So now we need to increase the loss of S company. Now we need to increase the loss of S company. So when we are going to increase, listen to me, when we are going to increase the loss of S company, so it's a negative, it's sort of expense. So we will debit retained earning and NCI. We will debit retained earning and NCI, two things. And one more mistake, because of this 10 issue, they have written here 175 in the question. They booked translation reserve as 175, and yes, it's a loss. It's a loss. Loss means they debited the translation reserve. So that means they debited the translation reserve by 175. It should, in reality, it should have been debited by 165. So they extra, please listen, they extra debited the translation reserve by 10. So what I need to do, I need to credit translation reserve. I need to credit translation reserve by 10, the first error. And yes, I will debit CR or retain earning by 7.5 and NCI by 2.5. See, correcting entry because less loss booked by accountant. Now we booked more loss. We did the first correction. This was the first correction, my dear student. Yes, it is a technical part. There are parts which are little technical. You are doing advanced paper. Just send this message to your mind. You cannot score complete 30 marks. Be very straightforward. Now one more thing. In the question, we just read it together that the translation reserve was calculated. It was wrong. Although it was wrong, which we just corrected it. It was wrong 175. It is correct amount is 165. But in reality, the share, the 25% share, the 25% share of this translation reserve should be shared by NCI. So they haven't given a single share to NCI. They haven't given a single share to NCI, which now I need to give. So out of this 165, 25% amount should be given to NCI. So as this is the loss, so NCI will be debited, and yes, translation reserve will be credited because we extra debit the translation reserve. We debit the complete amount on the translation reserve. In reality, we should not have booked complete amount in translation reserve. It should be split between NCI and us. So now what I will do, I will be doing 165 multiply by 25%. It is 41.25. So what entry I'll make, as it is a loss, so NCI will be debited by 41.25 and translation reserve will be credited by 41.25. This is the last correct entry of the practical area of today's question. Okay, now now I can do one extra working as well for you. And this is the working. See, they should have booked this loss of 60, but they did book this 50 loss. So I can formally solve this for you as well if you want. Listen, loss for the year using average rate, so it will be 900 divided by 15, which is 60, and loss for the year using closing rate is 900 divided by 18, which is 50. So difference is 10. Okay, this is the difference. You can solve it formally as well. Now my dear student, we need to just post 5 entries and the 99% question is done. See, this is the first entry, second entry, third entry. These are related to goodwill. These are related to goodwill. Okay, then we have this fourth entry, and then we have this fifth entry. Okay, so total 5 entries we need to post. If you want to take the picture, you may, because now I might move the I'm going to move the screen. See, these are the 3 entries I'm going to post right now on the pre-populated sheet. And then we have these fourth entry. Take the picture if you want. Then we have fifth entry. Okay. Okay. So finally, I'm going to shift my screen. Let me tell you the requirement first. Let's see the requirement. Wait. See this. The requirement is point number 2. Adjust the pre-populated spreadsheet response option to correct the draft consolidated statement of financial position of Peony Group at 31st December X2. Okay, so now I'm going to move for one more 10 marks requirement. One more 10 marks requirement. Okay, obviously just the posting of 5 entries. I'm going to do it now. Okay, so my dear student, this is the pre-populated sheet for you. Now in the examination, this will be given to you. Everything is same like this, but see these headings, the top headings will not be given. You have to give these headings yourself. But yes, I have already given these headings just to save our time, Okay, now let's post the 5 entries. This is the new consolidation now. Okay, it's a different now. Even I have calculated a separate class for double entries for consolidation, and I have posted on YouTube as well. So now see this. The first entry I have to make is goodwill debit and NCI credit. You have taken the picture. So goodwill debit means increase goodwill. See first, wait, see this, increase goodwill by 75 and increase the NCI by 75. Okay, increase goodwill by 75 and increase NCI by 75. Okay, sorry, let me enlarge the screen so it will be more convenient for you. Okay, wait, let me, okay, wait, okay, I think this one is more clear. Okay, so first entry I have posted, although the top headings you can't see, but still this enlarge the screen is better for you. Next thing is, next entry is the goodwill impairment entry. So goodwill credit by 220. See, this is the impairment column. So just deduct minus 220, goodwill will be reduced. Then you have retain earnings. See, retain earning will be debited by 165, means minus 165. Then you have NCI will go down by 55, minus 55. Okay, see, we have posted. Then we have foreign exchange loss on goodwill. Foreign exchange loss on goodwill means goodwill reduced by 230. And then we have translation reserve. See, translation reserve to be reduced by 172.5, 172.5. So it's going to be round off. In my PC there is a auto round off. Okay, now then NCI will be debited by 57.5. Sorry, 57 point minus 57.5. Okay, so I have just posted 3 entries. Now students, let's go for the fourth entry. The fourth entry was the less booking of loss. We need to book more loss, remember? So in that context, your retained earning will be debited by 7.5 minus 7.5. Then you have NCI will be debited by 2.5 minus 2.5, and translation reserve will be credited. Translation reserve will be credited mean increase by 10. Translation reserve will be credited means increase by 10. Okay. Now, don't worry about there is a issue of round off in my PC. So you don't worry about it. Okay. Now, the last thing is the transfer of exchange loss to NCI. So this was NCI debit 41.25. So minus 41.25 with NCI. And then you have translation reserve. Sorry, I've done this mistake. Wait. Yes, sorry. Really sorry. This negative 8 is, yes, it will come here. And this 10 will come here. Okay. Oh, sorry. Yes, I've just posted on the wrong row. Now, my dear student, 41.25 translation reserve will be credited. So 41.25 added here. Okay. So finally, we have posted all the four entries. All the four entries are posted. Now let's just finalize the right column. Okay, this right column. See, let me do it. The first number is property, plant and equipment. The first number is property, plant and equipment. No adjustment in front of property, so we'll just copy paste. Yes. The second number is goodwill. There are a lot of adjustment, so let's horizontally add all these. Okay. Oh, there is a mistake. Wait. Okay, 350 is the goodwill. Then we have add both of them, 18850. The third thing is current assets. Yes, there is no adjustment for current assets, so copy paste. Okay. Then finally add the last and second last. Okay, so your total assets are 22050. Please check it out. Total assets are 22050. Please check it out. Then next thing is your share capital. Okay. Next thing is the retained earning. Obviously, you need to add the columns. Yes. 15290. Then you have translation reserve, definitely big working. Okay, 296. Then we have, let's add all of them. Okay. Then we have NCI 56. Finally, the total equity will be these two. And we have now liabilities, non-current liability as it is. Then we have current liability as it is. Finally, the equity side will be these all. Wow. Yes, SOFP is balanced. Finally, your SOFP is balanced. Congratulations, your SOFP is balanced. The question is not ended yet. There is one theory part of IFRS 10 as well. Don't shut down the screen. Don't close the video. Okay, don't close the video. So please check it out if you want to. Let me just reduce a little bit. See, now you can see with headings. Now you can see with headings as well. Okay, so let's move to the iPad screen again, and so we are on our question paper again, and now the last requirement, this thing, see this changes in government regulation, see the screen. They are saying near the beginning of the following year, now they are asking about the next year, which is 31st December X3. Changes were made to government regulations in the country in which Nomstra company is located. This has significantly impacted Nomstra's operations and caused a fall in the value of the NYC currency depreciation. If you see the current world, it happened with many countries like Pakistan, Bangladesh, Nepal. Huge depreciation of currencies. There are some African countries as well. Turkey, huge depreciation of currency. So the economies are uncertain nowadays. So see, they are giving you a practical question. Now, when such things happens, I've physically seen this thing. When such things happen, government take actions, government intervene. The directors are aware that due to the changes in government regulations, Nomstra company is no longer permitted to transfer funds to Peony company. Moreover, see, the first thing is, now the subsidiary company can't transfer funds to Peony company. It's okay. It's okay. If company can't transfer, only there are funds restriction. Still we have control. Still we have control. This doesn't mean we have lost the control. So till now, till this 1.5 line, it's perfect. There it happens. Sometimes governments apply restriction that you cannot transfer the fund. Still it's your subsidiary. Still you have control. But now read the next line. Moreover, government restrictions have been enacted which limit the extent to which the Peony company can exercise right or governance over Nomstra companies. This line says your control lost. Your control is lost. Bye bye. This is dangerous line. This is dangerous line. So this part is linked to theory of IFRS 10. This part is linked to theory of IFRS 10. Okay, let's just give your opinion. First read the C part. Using the exhibit 3, see this is the C part, 5 marks only. Okay, using the exhibit 3, discuss the potential impact of the changes in government regulations on the accounting treatment of Nomstra company in the consolidated financial statement for the year ended 31st December X3. For the year ended 31st December X3. Okay, right? So you need to discuss IFRS 10, that do we have control or not? See this. How to write this? The first thing is to state the rule. Just simply write the definition of IFRS 10 control definition. It's a 3-line definition, very famous 3-line definition. Power over investee, exposure of or rights to variable return in the investee, and the third point is current ability to exercise your power through your involvement, current ability to impose the power through your involvement. Okay, so these are the 3 lines. Now you will apply you will do application. So very good application is just the restriction of transfer of fund does not stop you from doing control. So this is not an extreme point. It's okay. The first point was okay, but then they have written that you cannot exercise your rights and governance. This means your control is lost. Now, once your control is lost, you have to destroy the building of consolidation. You have to destroy the building of consolidation. Now, my dear students, there are 2 options. The first thing is your control is lost, but still you have significant influence. Your control is lost, but still you have, see, significant influence. And now what do you mean by significant influence? See, these are the points A, B, C, D. I have written all points. Significant influence means the definition's power to participate in financing and operating policies of an entity if you have this power. Number 2, you have directors in the board of investee, 2 or 3, 1 or 2 directors. Number 3, provision of technical services. You are giving a high technical services to them. That means they are dependent on you. See, material transactions between you and that company, still this is a hint of significant influence. Providing managerial personnel to them, again this is a hint of significant influence. Let me give you some practical example. Sometimes even you don't have shares, you get the significant influence. For example, doctors in hospitals, there are some super hit doctors. The hospital are dependent on those doctors because the majority of business is coming from that doctor. Same is the case with teachers. Some star or super hit teachers, sometimes institutes are dependent on those teachers, remember. So that's why you get significant influence. So if you, so what are, our control is lost, okay, we have declared. So if the control is lost, the next level is significant influence. So if you have significant influence, what you will do, you will destroy the building of consolidation, you will remove all assets, liabilities, goodwill, net assets of S company, and you are going to book gain or loss on disposal. Gain or loss on disposal on gain or loss on disposal of subsidiary, okay. And from now onwards you are going to do equity accounting. From now onwards you are going to do equity accounting, right? Now the second case, case 2. But if you think, I told you we have two options, the control is gone. If you think you don't have even significant influence now, control is gone, also you don't have significant influence, so now it's just a trade investment for you. It's just a trade investment for you. And yes, for trade investment we apply IFRS 9, and IFRS 9 says to record your shares investment at fair value, okay. So then we need to bring it to fair value. So this is all we need to discuss. I hope you liked it. I have posted other classes on YouTube as well. So if you want to watch, you may watch, right? On the YouTube channel, there are a lot of past paper classes for your reference. But yes, in our paid classes, we give proper marking facilities. We mark the mock exam. We give a lot of marking facilities. A lot of other questions are there. So if you liked it, please comment on this video. Thank you and take care.